Hi, I'm Max Keiser. Welcome to the Keiser Report. You know, if you've been following this show, you got to know that the price of silver has been on the back foot. Why? Because the CME and the COMEX, the people in New York that make a market in silver, who are controlled by JP Morgan, have been raising the margin rates. Unprecedented number of margin rate raises in a very short period of time. Let me explain what this is doing. This is a recruitment mechanism. It's like those Abu Ghraib prison photos, remember? Well, that was a huge recruiting tool. Now, every time the CME increases margin rates, it's sending a huge recruiting message to the Silver Liberation Army, who's sucking more of that physical silver off the market. You are being hoisted by your own margin petard, CME. All right, let's go to an undisclosed location somewhere in the United States and speak with the beautiful and always vivacious Stacy Herbert, who I understand is having a silver round made in her homage soon. Stacy, hello.
Hi, Max. Yes, you could tell I'm in America because behind me, over there, you can see a picture of Bin Laden. Over here, you can see my 7 rifles. So I'm ready, I'm armed, and I'm ready for the show. I'm part of the Silver Liberation Army.
Lock and load, baby. Is that a photo of John Wayne I see back there in his green beret outfit?
Yeah, right up there, carrying the gun, yeah. And a piranha next to him.
I wonder how John Wayne would have handled that Bin Laden frozen fish in the sea incident.
Actually, Bin Laden is my first headline. Not because I want to talk about him, but there's this interesting little bit in here. Osama bin Laden hideout worth far less than U.S. claimed. So Pakistani property experts say that the U.S. government's description of a $1 million mansion that Osama lived in was way off the mark, as further exaggerations come to light. Local property experts said at most the house was worth $250,000. But here's the quote I want you to listen to, Max. The Pakistani property expert said when he was told about the American estimates that the house was worth $1 million, he chuckled and said, maybe that's the assessment from a satellite, but here on the ground, that's the price, i.e. $250,000.
Well, I heard that he was being foreclosed on, just like people in Las Vegas and Miami and California. And JP Morgan Chase mortgage unit authorized the hit as a way to get him out of there so they could release it to somebody else. It's all about the mortgages and the real estate and the criminality on Wall Street.
Well, Max, I want to carry this analogy forward. I want to look at the different views from satellites and then down on the ground. Here's the headline, Max. Fed presidents signal record stimulus won't be removed soon. So these are the Fed presidents of Boston and San Francisco, and they signaled recently that their monetary policy is not going to tighten after June when theoretically QE2 ends. And from Eric Rosengren, president of the Fed Reserve of Boston, he said, right now, we're pretty far away from our targets. And right now, we're keeping monetary policy accommodative.
Right. Well, the European Central Bank, the ECB, just telegraphed that they probably won't raise rates. The euro is down. Bank of England has said, due to economic stagnation, they won't be raising rates. And the Fed looks like, of course, they won't be raising rates, and they'll be bringing QE3 soon enough. So none of these central banks are raising rates, which means that the surfeit of fiat money flooding the globe and destroying people's purchasing power and skyrocketing food and energy, that trend will continue. And whatever price silver bottoms out at, I hope you've been buying it with both hands. Buy it until you're bleeding, because $500 is the target. What else you got?
Both of these Fed presidents say that the inflation isn't a long-term risk. So again, this is what they're saying from the satellite view up at the Fed. Now let's look at the reality on the ground. Food prices rise to near record as inflation accelerates. So remember, they just said they're going to keep monetary policy loose because they don't see any inflation. Here, the UN is saying that March was the second highest food inflation on record.
Right. Well, if you're Ben Bernanke, the way to do the job as he conducts his policy, first, take a large stick and poke out your eye. There. Now you're half blind. Now, look at the statistics in front of you and don't count wages. And look at the tips, the Treasury interest protection securities, Treasury inflation protection securities. And anytime they start moving up, use taxpayer money to buy a whole bunch in the open market to keep the price artificially low. And then go in front of Congress with one eye poked out and say, well, the tips are not going up and wages aren't going up. Therefore, there is no inflation, Congress. We got to keep rates artificially low, which, of course, without rates being higher, there is no incentive to save. And without savings, there is no capital. And without capital, there is no capitalism. Fed Chairman Bernanke is Comrade Bernanke, overseeing a Politburo of command and control rate meisters whose only intention are to make Wall Street bankers filthy frickin' rich.
The article goes on to say that the cost of living in the U.S. rose at its fastest pace since December 2009 in the 12 months ended this March. Gasoline prices were up 91 cents since December 31st. This adds a total cost to the consumer in the U.S. of $125 billion.
Well, what they have working in their favor, I just noticed a story coming out of Detroit that 50% of the population, men, women, and children combined, are illiterate. Fortunately, they won't be able to read about their euthanasia, economic euthanasia experiment being conducted in the city of Detroit.
Well, and another headline is just a quick headline, just so you know, that about 1 in 7 in U.S. receive food stamps. This is the latest updated number. Remember, at the beginning of the crisis, 1 in 14 were on food stamps. Now 1 in 7 Americans are on food stamps.
Well, that number is set to go to 90% of Americans will soon be on food stamps because there's no return on savings, there's no jobs, and there's no way to make a living out there except if you're working for the criminal class in Washington, D.C., either as a congressman or as a prostitute.
And, of course, there's no real justice, Max. I mean, they might, throw this guy into the sea, the guy behind me, but there's been no justice in terms of all the criminal fraud. And we're going to get to that in a minute, but I want to show you that inflation isn't just hitting Americans and the third world. We're seeing this in the UK. Why our purchasing power is set to suffer the biggest squeeze since 1870. And this comes from Roger Boodles, advisor to Deloitte in the UK. And he says pay growth is unlikely to catch up with inflation anytime soon. Inflation is heading towards and possibly above 5%. So again, income's going down, inflation going up. This is the reality on the ground, not from what they see in the satellites up at the Fed.
Right, and not according to the central bankers who conveniently omit any statistic that would challenge their policies that are structured in a way to make the minority 1% oligarch class wealthier. That's their job. They're doing a good job. And the Osama bin Laden episode, that was a few thousand miles off target. I think they could have found a better target.
Well, you mentioned central banks, and those are my next two headlines, because with all this inflation and all this money printing and wild, crazy behavior from the, the Tora Bora in D.C., China aims to have more gold than America. So Rob McEwen, founder and former head of Goldcorp, now the world's 5th largest gold mining company, believes central bank purchases could help push the price of gold to $2,000. He says China is out to have more gold than America, and Russia is aspiring to the same. Now, of course, China has officially 1,000 tons of gold, and if they want to catch up to America's alleged quantity of gold, they need to buy 7,000 tons.
Well, are you going to get to this Mexico entry to this as well?
Yes.
The central banks around the world are for the first time in 20 years increasing their gold reserves.
Well, Max, let's move on to that Mexican story because that's in the next headline. Mexican central bank buys 100 tons of gold. As a result of Mexico's purchase, central banks, sovereign wealth funds, and other so-called official sector buyers are on track to record their largest collective purchase of gold since the collapse of the Bretton Woods system, which pegged the value of the dollar to gold in 1971.
Yeah, and Peter Schiff makes a good point on his latest editorial, talking about the institutional appeal of gold, not only the central banks, but the endowment of one of the big universities in Texas just bought $1 billion worth of gold. He says that that institutional appeal extends to, let's say, the sovereign wealth funds. You know, the one in, I believe, Qatar is worth 600 billion, not Qatar, but Kuwait.
Abu Dhabi.
Abu Dhabi. Right, Abu Dhabi's sovereign wealth fund, they've got 600 billion in cash to work with. If these sovereign wealth funds on the institutional side start to put 5, 6, 7% into gold bullion, that's an incredible demand story. That's what nobody is talking about on the silver and gold story. They're all looking at the supply, but they're not really understanding what the demand dynamics are going forward. And as Rick Ackerman said, you know, when you increase supply, as they're doing now by flooding the market with more naked short sales in the silver pits, you increase demand. And this is an axiom on Wall Street that is inflexible. We got about 30 seconds left. Let's talk a little bit about Deutsche Bank, accused of massive mortgage fraud, sued for $1 billion by U.S. government. What's going on there, Stacy Herbert?
Well, the Justice Department has sued Deutsche Bank, one of the world's 10 biggest banks by assets, for at least $1 billion for defrauding taxpayers by repeatedly lying to a federal agency, the Housing and Urban Development, when securing taxpayer-backed insurance for thousands of shoddy mortgages. But there's a quote here that reminded me of something that you always say, Max. This is from Preet Bharara, the U.S. attorney in Manhattan. He says, these companies repeatedly and brazenly breached the public trust. This lawsuit sends them and other lenders the message that they cannot get away with lies and recklessness. They cannot casually assign the prospect of being caught to the cost of doing business.
That's right. And Deutsche Bank, of course, is embroiled in the scandal along with Goldman Sachs in the Greece debt hiding scandal from a few years back, and that's why Deutsche Bank is being sued, and that's why Deutsche Bank is being asked to appear before Congress at the behest of Carl Levin for charges of fraud and perjury. All right, Stacy Herbert, thanks so much, and good luck in that undisclosed location somewhere in America. Hope to see you back in the studio soon.
Thank you, Max.
All right, and that's going to do it for this half of the show, but don't go away because there's much more coming your way after the break. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to sunny Los Angeles and speak with Mike Maloney of GoldSilver.com, author of Guide to Investing in Gold and Silver. Mike Maloney, welcome back to the Keiser Report.
Thanks. It's great being here, Max.
Okay, let's talk about silver. Last year it was up something like 80%. This year it started off with a bang, up big. Currently going through a bit of a sell-off. What's going on in the silver market, Mike Maloney?
Well, you know, as far as the sell-off goes, I really don't care. Well, actually, I do. I'm hoping silver will go down a little bit more because I want to buy more. I want a lot more. Silver has yet to exceed its 1980 high. I mean, we came within a breath of it, but it hasn't exceeded its 1980 high. Can you name one thing on this planet that is still selling at a discount to its 1980 price?
Right, okay. Now, I'm looking at the US dollar, and of course, silver and gold are the contra indicators of the dollar, and the dollar is still trading almost at an all-time low, and that trend, even with the Osama spectacle having given it a bit of a boost, it's still trading terribly. How can these two things coexist? The dollar trading at near all-time low with a 20-25% retraction in the price of silver.
Well, they can't exist at the same time indefinitely here. Something has to break. But you know, they're measuring that when you talk about the dollar is trading near lows, that's the dollar trading against other fiat currencies. If you look at what has happened, the dollar measured in gold or the dollar measured in silver for the past decade, the dollar is just crashing. It is burning and crashing. And this will continue. You know, right now we are seeing the euro is beginning to fall apart. The euro is a very poorly designed currency that cannot last. You can't have all these countries with different monetary policies sharing one central bank and expect the currency to last. As far as the dollar is on death's doorstep also. People don't realize that every 30 to 40 years, the world has a new monetary system. We had the classical gold standard till World War I, the gold exchange standard between the wars, the Bretton Woods system from 1944 to 71, and now we have had the dollar standard for the last 40 years. It's on its last legs too. No man-made monetary system can account for all of the forces in the free market. They eventually build up all of this pressure, become unstable, and then stress cracks start to show. That's what we're seeing now. The reflection of gold and silver prices is just a reflection of loss of confidence in the US dollar. And, Ben Bernanke is pretty much committed to sacrificing the US dollar to try to save the economy, which will crash the economy if it's a catch-22. And Alan Greenspan really left him painted into a corner. He has no good options. And the dollar's doomed. Gold is going to go to infinity, so will silver. So measuring gold and silver in dollars is really, I think, idiotic. I measure it in how much stuff it purchases. And it's not purchasing near enough stuff yet. It isn't anywhere near a bubble. Anybody that says that gold and silver are high right now, they don't know what they're talking about.
All right, now let's talk about the CME and COMEX. The CME is in oversight for commodity trading. They have selectively singled out silver versus other commodities, and they've been successively raising margin requirements 4 times or 5 times in the past week, 2 weeks, 3 weeks. And of course, this is putting incredible pressure on anyone who has the silver in a margin account. But why selectively are they doing this to silver? And they claim, of course, that it has to do with volatility. But in fact, their actions are creating the volatility. So it's a bit of Orwellian newspeak here, because they're creating the volatility by mucking around selectively with the margin rates. And what does the CME have against silver? Is it because they're all financial terrorists and they're in bed with Blythe Masters, the capo di capo of all the financial terrorists in the world?
Yeah, well, silver is one of the precious metals. It is money, just like gold. People don't realize that the currencies that we use today, there's no country on the planet that uses money. We all use currencies. Currency has to be a medium of exchange, a unit of account. It's got to be portable, durable, divisible, and something called fungible, which means each unit is interchangeable. They're all the same. $1 in my pocket buys the same amount as $1 in your pocket. Money has to be all of those things plus a store of value over long periods of time. The US dollar does not qualify as money. This thing about manipulating silver and changing margin requirements, this is nothing new. It has happened before. If you go back to 79, you'll see that, the Hunt brothers, people say to me, when I talk about silver is still selling below $50, it's 1980 high, they go, oh yeah, that's when the Hunt brothers tried to corner the market and drove the price of silver up to $50. The Hunt brothers were the sacrificial lambs to save the US dollar back in 1980. Silver was in a runaway, and so was gold. And when gold and silver are in a runaway, it means that the death of the currency is right around the corner. And something had to be done. And they raised margin requirements several times. The Hunt brothers originally, when they first started getting into silver, they took delivery of physical silver, and they actually got it out of the US, they flew it to Switzerland, but then they sort of got charmed by margin. Margin works well when things are going up, but people don't realize that margin is a professional's game. Margin gets duller and duller on the way up, but sharper and sharper on the way down. You have to study the way that margin works. As an investment goes up, you're paying off your margin. You're gaining more and more equity, so you're leveraged less and less as you win. But when you start to lose, you get leveraged more and more and more on the way down. The Hunt brothers got charmed into going out on futures contracts and using leverage, and that was one of their big downfalls. They were actually worried about the dollar collapsing. They were really silver investors. They weren't speculators. They were investors that were protecting themselves from the stupidity of the Federal Reserve and the U.S. government. I just wrote an article on this. I can't believe that hundreds of thousands of people have read about the Hunt brothers and haven't come to the exact same conclusion, that the Hunt brothers were used as the sacrificial lambs to save the U.S. dollar. They raised margin requirements over and over again, and then they put in position limits, and then they finally put in something called liquidation orders only, meaning you can't open a new futures contract, you can only close out old ones. That's the same thing as saying, until this rule is lifted, there will be no new buyers. That's the same thing as saying, until this rule is lifted, the price of silver has to go down. And later, during the trials for the Hunt brothers, it was exposed that many of the board of directors of the Commodities Exchange were short silver. So for every dollar that the Hunt brothers were making, these guys, it was coming out of the pockets of the board of directors of the Commodities Exchange. And so they put in this liquidation orders only. Silver peaked at $50, and coincidentally, that same day, gold peaked at $850. I don't think it was coincidence. I think traders that had large positions in silver and gold said, well, if they can do this to silver, gold is going to be next. And they started selling. I think the floor traders on the Commodities Exchange, that the silver pit, those guys, they got burned. And then the gold guys found out about it and said, we better sell. So I believe that this has, I see that this has all happened before, all of this manipulation. However, this time it isn't a few large investors. This time it's the masses rushing in. This time it's a bazillion small investors buying silver. And here's one thing. The precious metals always, always win. In the end, they do an accounting of the currency supply. This is one of the major themes of my book, is how throughout history, a country has so much gold and silver, and then they come out with a currency that gold and silver is measured in, a national currency, and they expand the currency supply, and gold and silver lay in wait. And then suddenly, people lose confidence in this currency, and they start bidding the price of the gold and silver up until the gold and silver rises to meet or exceed the value of the currency supply in that country. This has been happening actually since the year 407 BC with the first great inflation in Athens. And it'll continue to happen. It's just natural.
All right, you mentioned gold there a second ago, and of course the two trade in tandem for the most part. I noticed that central banks are buying gold. I think I just saw a news story that Mexico is buying 100 tons of gold, which is quite a large piece of gold. China's out there shopping for thousands of tons of gold. And what about China? China, of course, buying all this gold, but are they also interested in possibly buying silver? And before I want to mention that in Mexico, of course, there's a movement to bring back a silver-backed currency to trade alongside the peso, the paper peso. And so there's a movement there to go to a hard money standard, as is the case in some states in the United States, plus other countries trying to get back to a hard money standard. But talk about Mexico and China. Mexico, what you see there, and China, are they also interested in silver on top of buying gold? Mike Maloney.
The countries that are trying to go back to hard money standards, it isn't their central bank that is doing this. The central banks are fighting this tooth and nail. That's usually some independent politicians, or in the case of Mexico, Hugo Salinas Price, for instance, is the originator of the silver movement in Mexico. But when it comes to China and all these other countries that are now net buyers of gold, I just did a video recently called The Game Changer. And if you look at the bull market of the 70s, where gold went up 24 times its original price and silver went up 36 times its original price, the central banks were net sellers on the average, central banks sold more into the market than they were buying. When they sell into the market, that depresses the price, and still gold exploded and went up 24 times its original price, silver 36. This time, just for the past couple of years, central banks have become net buyers, and a whole lot of the buying is actually off the books. So the net buying is a lot bigger than what we can see.
All right, good point. Mike Maloney, thanks so much for being on the Keiser Report. We'll check back with you hopefully soon to catch up on the news. And your website is goldsilver.com. Thanks, Mike, for being on the Keiser Report.
Thank you, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Mike Maloney of goldsilver.com. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.